Bishop here with the Bishop Group Coaching Library, and this is a special edition of the Coaching Library, and I've got a special guest here today, Nestor Montemayor. He's been with RE/MAX for a while. He joined our organization about a year and a half ago, and now he's doing more business here in San Antonio, and we wanted to take this opportunity to talk about a topic that is important to both of us, something that we've both worked on a lot, and we feel like we can really add some value to the people watching today. And that is the topic of owner financing. Okay? What is owner financing? Should I look into owner financing? There's also other terms like lease option or rent to own. Okay? These are terms that we've all heard at one point or another, and some have considered it, some have taken advantage, some have been burnt in the past, and some have been able to make them work. I'll start with my experience with owner financing. What it can be used as is a vehicle to purchase a home or a piece of real estate, commercial, residential, without having to get financing from a bank. Okay, so in other words, if you're the seller and you want to sell your home, you can sell your home without having to go through an appraisal process, without having to go through a lot of strict lending guidelines. It can be a great way to make residual income through interest. And essentially what you're doing for the seller standpoint is you are selling the home to a buyer, but you're acting as the bank and you are financing them on a home loan. Okay? And there's a lot of benefits to it. A lot of benefits. Long-term profits. You end up making a lot more off of the piece of real estate over time. There's relatively low risk. And for a lot of people, it makes more sense than trying to find a property and rent it out to a tenant, because that can end up with maintenance issues and having to put money back into the home and things like that. When you sell homeowner finance, or you finance a person to purchase your home, essentially you are a lien holder. You're not the owner of the home anymore. You're the lien holder now, and so you don't have the responsibilities of fixing the home up, making sure it's livable, et cetera, et cetera. So it's made sense for a lot of people. When I first started doing owner financing transactions, it was about a decade ago. We're in a pretty tough economy, and a lot of sellers would come up to me and they weren't able to sell their home and break even or make a little bit of money. And the market had come down back then. This was during the 07, 08 and 09 recession, the housing market correction. And people would come into our doors and need to sell. A lot of them active duty military, a lot of them people that had bought recently, and we would do the CMA and look at the value of their home, and we'd find out, there's just no equity to sell. In other words, you owe more money than the home is worth, And so rather than just turn these folks away or tell them there was no option for them, we gave them some options, and owner financing was a great option for a lot of these people. A lot of folks, they didn't want to have to deal with the maintenance of renting out a home. They didn't want to have to mess with their credit by doing a short sale. So owner financing or an assignment, it was a great option for a lot of folks, and we did quite a few of them back then. What you essentially do is you market your home, and you offer to finance the buyer. The buyer has to come in, and provide a down payment. Normally it was in the amount of 10, 15, 20%, but a substantial down payment. And they would be put on payments. Back then we were doing a lot more balloon payments, so the sellers wouldn't have to hold on to the notes for 5, 10, 15, 20 years. After the end of 5 years, there would be a requirement that the buyer go out and get a refinance or sell the home or pay off the loan altogether. That way the owner didn't end up holding on to the note for 20, 30 some odd years. Some owners actually enjoyed that. They said, I like the idea of long-term residual income. And some, were more open to the fact that, I'm willing to do this for 3 to 5 years, but I'd like to get the money for the house, pay it off within the next, short-term amount of time. And so it was very successful for a lot of folks. Now, I learned a lot during those times that there's certain ways to do things that protect both the buyer and the seller, or the borrower and the lender, okay? And so we're going to talk a little bit about some of that on this video, and then they'll be following, we're going to do some follow-up videos as well to get a little bit more into some of the deeper aspects of owner financing and what to do to make sure that you negotiate these things correctly, and what to make sure that you are treated fairly on both sides. Now, on the buying side of it, there's a lot of people that have terrible credit, or they may have a situation with they just started working, or they just moved to the area, or they may be working on catching up on their taxes, or there's just a variety of different reasons why people can't get qualified to buy a home. There's a lot of people out there that are tired of renting and they want to own their own place. And so owner financing is a great way to get into a home that you own, that you can build equity on, that you can live in and make your own. But at the same time, you want to be careful because there's a lot of sharks out there, and there are some people that will take advantage of you in the process. And so Nestor has a unique experience with owner finance. He's done quite a bit of it over his years in the business. And so what we're doing now is we're marketing to folks that are interested and in need of owner financing, rent to own, lease option, or assignment properties, okay? What we want to do is we want to get you in, and we want you to show you exactly the best way to do it. We want you to give you representation so we can protect you during this time. We want to negotiate on your behalf so we can help you get better terms for your note or your owner finance deal. And so, Nestor, I'll let you get into it a little bit. What would you say, in your opinion, is the best thing about an owner finance transaction, and what's one of the worst things?
Okay, I'm going to start saying that I've been doing more than 200 owner finance transactions in the last 10 years, and I help a lot of people that nobody else was able to help. They say in the US, they say that bad things happens to good people, and I don't know what kind of bad credit you have, and maybe that's what is holding you. Maybe it's just the fact that you've been working in San Antonio for 10, 20, 30 years with what they call TIN number, but you have no social security number, and you've been paying rent, throwing your money away. And owner financing is the best way to go for somebody that somehow is unable to buy no other way. Down payments, I'm pretty sure that most of you guys out there, they got the money to buy the house. It's just that nobody's giving you the chance to buy the house. So if you go owner finance, and instead of just paying rent, you're going to be investing your money on a property, and if your situation is going to change down the road, then you can go and switch the loan to a regular bank at a or lower interest rate. Because that's probably the only thing that a little bit against the owner finance deal, that when you finance a house through the bank, your interest rate can be anywhere between 5, 6, and when you go owner finance, most of the time they're going to be between 8 up to 11 or maybe higher. That's the only thing that you need to be a little bit careful, because your payment can be very, very high if you end up signing a contract at 11, 12, 13% on a home. And that's what we're going to do for you. Try to help you, because we know how to do it, because we know how to manage those kind of situations to get the best deal for you at the lowest interest rates. Everything is negotiable in this life, so we want to do the best that we can do to help you.
And let's talk about that for a minute. Why are interest rates higher on owner finance deals rather than just your normal bank loan? Because let's say right now, and we're not quoting rates, but bank loan right now, you could get a mortgage for around 4, maybe 4.5% interest, okay, for 30 years or 20 years. And owner financing is usually, if you get a really good deal, 6-7% or higher.
Correct.
And it can go all the way up to in the teens. But I think most people are looking kind of in that maybe 6 to 7 to maybe 10%. Isn't it fair? I mean, if you're a seller and you're willing to take the risk of financing somebody, is it fair for you to charge 6-7% or more?
I guess so. I mean, 6-7%, 8% to me is worth it. I don't know if you ever tried to buy a car with bad credit. I mean, how much they charge now? 19%, 23%.
Oh, they charge a lot.
I mean, they charge a lot to end up paying 8% on a home. I mean, and just for a few years, because hopefully you're going to be able to fix the situation down the road. It's not a bad deal to me. Now, the main reason why they charge a higher interest rate, that because for the owner of the house, it's an investment. If they put that money on the bank, they're going to end up making 1.5%, 2% yearly. But if they finance the house to you, they can make a little bit more income for them. So the interest rate is higher because they're going to try to make income, but still, it's not as high as 20, and it's not as high as throwing your money paying rent. So
That's a
to
good
me,
point.
it's a good deal. And the down payment that they require is just to be on the safe side, because you never know what is going to happen with the house if they decide to, I don't know. I mean, I've seen homes that they were owner finance, and the people that were buying the house, they end up walking away from the house with the AC, with the all the furniture, with all the doors on the house. So the down payment is to protect the owner of the house, that nobody bad is going to happen to that investment.
Yeah, and it's worth it. It's worth it. And at the end of the day, a person is willing to pay a little bit more for something that they're going to own. Okay, so it's like, okay, well, I can't go get a loan through a bank, but I have a person here that owns a home that is willing to finance me, but I'm going to pay higher interest, and I'm going to have to put a bigger down payment so he can protect himself. And at the end of the day, that's a fair thing. That is something that both, there's a win-win, we call it in real estate.
Correct.
You want both sides to win. You're going to win because if you're the buyer, because I'm able to get into a home that I'm going to be able to build, and I'm not throwing my money away on rent, and I can do what I want with it, and I have the flexibility of not crazy payment. If you're the seller, you're going to win because you're going to get a big down payment. You're going to be able to sell your home and not have to worry about putting up with a crazy tenant or an appraiser that's going to come in and lowball your appraisal and say your home isn't worth anything. And so it really is a win-win.
Yes.
Would you agree with that?
Yes.
I think so too. Now, what makes it a win-win is because, like in all parts of real estate, there are people that are looking to take advantage. And that's why I think, Nestor, it's important for us to talk about the need for a real estate agent in every owner financing transaction to take place. There are times, and if you just drive down, whether you're watching this video here in San Antonio, whether you're in another part of Texas or another part of the country or world, you're going to see those little bandit signs that say owner financing home, 3-bedroom, 2-bath, come bring us in here. What happens? You get a lot of good people that call in on these signs, and they get a hold of these investors, and the investors don't treat them that well. They may get them into an owner finance home, but the down payment's ridiculous, the interest rate is way too high, the terms are no good to where it puts pressure on them after only a year or two of them being in there. And that's why it's important to have a real estate agent negotiate on your behalf to get a better deal at a transaction.
That's how it works. Yes. I mean, if let's just say, give you an example. If you need to go to court because somebody's suing you, you're probably going to hire a lawyer because you want to be as good as you can be represented in that situation. And that lawyer is going to charge you, okay? But still, you want to be protected. Now, if you buy in a house, you can go through us. The only difference is going to be that we're not going to charge you. We're going to help you get the best deal, and it's going to be pretty much free for the buyer.
Right, because the seller pays our commission.
Correct.
And that's something that we negotiate in all of our transactions, is that the seller not only give you a fair deal, not only give you the right concessions, but also pay for the commissions involved. And so, Nestor and I have been doing this a very long time. How long have you been in real estate, Nestor?
11 years.
11 years now? Nestor's been in the business 11 years. I've been at this thing for about the same amount of time, a little bit over 10 years, going on 11. And one thing that we've both learned in this business is, looks like we got a little random call there. One thing we've learned in this business is this is a business about taking care of people. This is a business about finding win-wins, making sure people, walk away from a transaction, walk away from a real estate purchase or sale, knowing that they got represented and that they won, okay? Now there's lots of different ways to win, and sometimes you win more than other times. But by having a real estate agent involved, especially a RE/MAX agent, especially somebody from our team or our company, you give yourself the best chance for success. And so what we're going to do in some following episodes is talk about some of the logistics of a real estate transaction, how to negotiate some of these transactions, how to handle yourself after the transaction, and how to make sure that you don't run into problems down the road if you're a seller or if you're a buyer or if you're the lender or if you're the borrower. And so look forward to a lot more great information with regards to owner financing. If you want more information, give us a call. You can reach us here at 210-309-6244. That's our direct line for all questions property management related. And we can definitely give you a list of homes that are offering owner financing terms here in San Antonio.
Thank you very much.
All right.
Well, give us a chance. Thank you.
We'll talk to you soon. Bye.